Good morning, trading family. Grab your coffee. Monday just showed up with a full plate and it is not waiting for you to wake up. Last week, the hardware rotation had its loudest week in months. Micron, ticker MU, closed up 15%. Advanced micro devices, up 11.5%. The Qs hit 711, all-time high going into the weekend. And then the weekend happened.
Quick reminder before we get into it, nothing we say here is financial advice. We're just two guys reading the tape and telling you what we see. Always do your own research before putting money anywhere.
Here's the setup. Today, a new ceasefire plan landed on two desks simultaneously, Iran's and the United States'. Third-party delivery. Neither side has responded yet. Trump rejected the last offer Saturday. Netanyahu went on camera Sunday. War is not over, his words. Enriched uranium still inside the country. Enrichment site standing. Proxies still operating. These aren't old headlines. This is a fresh plan on fresh desks this morning. And the market is parked right on top of this setup.
And the physical piece is what people keep missing. There are 12 confirmed mines in the Strait of Hormuz right now. Even if a ceasefire gets signed today, insurance companies will not clear tankers through that route. Minesweepers take weeks. Route verification takes weeks. Insurance re-rating after an active conflict zone takes weeks. The ceasefire stops new damage. It doesn't undo what's already there. That's the constraint nobody is pricing into the reaction.
So, right. And while the diplomatic side figures itself out, Iraq declared force majeure on foreign oil fields. ExxonMobil, Shell, Chevron, legally off the hook for pumping. That's not a threat. That's a legal status change that is already in effect.
Aramco posted 26% profit growth this quarter, and their chief executive officer went on record warning of, quote, long disruption. The company printing record profits from high oil prices is the one telling you the disruption isn't ending soon. They know.
They are incentivized to watch this run. Keep that in the back of your head.
The strategic petroleum reserves don't refill while the strait is mined. Every day this continues, the emergency buffer gets thinner. That's the math working against any quick resolution.
Oil closed Friday at $97.62, up 2.31% from the prior close. The week comes down to this. Trump accepts the plan. Oil reverses, risk stays on. The Qs hold the high. Trump rejects before Tuesday. Oil cracks through $100. And then we get the consumer price index print on top of it.
That's the trap. Oil at 97 flowing into Tuesday's consumer price index reading. If the print comes in hot, you've got an inflation reacceleration narrative. That lands exactly when the artificial intelligence shield that's protected this market all year is already technically stretched.
And here's what's wild. The VIX closed Friday at 18.19, up 5.82% on the week. And the Qs are at an all-time high at the exact same time.
That's not confusion. Institutions are long and buying tail insurance at the same time. They're not contradicting themselves. They believe in the fundamentals, and they're hedging this exact tail risk.
That's the smart trade. Long with protection on the tail. One tweet from one phone sets the price of oil this week. And the price of oil sets what Tuesday's print looks like. One tweet. That's where we are. Now, let's talk about the Qs, because Bloomberg Tech dropped something this morning that I think actually settles the Burry argument.
Burry's been calling 1999 for months. The Bloomberg data finally gives us the arithmetic to answer him. The Qs are up 230% since April of 25. And the forward price to earnings ratio is lower than it was a year ago. Earnings grew faster than the stock price. You're paying less per dollar of earnings today at 7-Eleven than you were a year ago at 220. That's not a bubble. That's earnings outrunning a stock that's already up 230%.
Break down the 1999 comparison for me.
In 99, you paid 100 times earnings for companies that earn nothing. What we have now is a shrinking multiple on accelerating earnings. Burry says CapEx looks like the year 2000. That's fair. But the valuation math doesn't support the 99 comparison. The arithmetic is just different.
A bubble is when price disconnects from reality. What we've got is price reflecting reality that's growing so fast, it's actually outrunning the stock. That's not the same thing.
The technical picture is a different story, though. The technology sector exchange traded fund, the tech sector, has a relative strength index reading at 83. That level has only happened 5 times since the year 2000. Every single time, you got a 1 to 2% pullback within days. Not a crash, a breather. And the Q's own relative strength is above 80 with the price above the upper Bollinger Band. That's the 10th time since the year 2000.
So, fundamentally, the cheapest it's been in a year. Technically, the most stretched. It's been in a long time. Both things true at the same time.
The 6-week green streak has only happened twice since 2009. April 2009, the bottom of the financial crisis. January 23, the start of that recovery. Both times the run continued.
So history says, keep going. The options market says, expect a bump. Burry says 99. I'm with the first two. But I am not going to be the guy sitting in cash when the dip delivers the shopping list a second time. If the relative strength comes in, I want Micron at $600. I want advanced micro devices at $350. Those are the levels. The list is ready.
If the ZIX spike delivers the pullback, those become the entry points. Now, NVDA.
NVDA, they are not a chip company anymore. I genuinely don't know what else to call them.
$30 billion into OpenAI. That's the latest round alone. And total artificial intelligence equity bets in 26 now sit at $40 billion. Corning, ticker GLW, Iris Energy, that's IREN, and others. OpenAI's post-money valuation is $840 billion. If that company goes public, it's the largest initial public offering in history.
And Jensen went on camera and said, this might be the last time they can make that kind of investment. You don't say, last time, unless there's a reason you can't do it again. And the reason is, the company goes public, and you legally cannot invest as a private participant anymore.
The logic is vertical integration through investment instead of acquisition. NVIDIA builds the picks and the shovels. Now they're buying equity in the mines.
And the big five are spending between $660 and $690 billion on CapEx in 26. Oracle committed $65 billion in cloud contracts in 30 days. Just signed a $20 billion cloud deal with Meta. Every dollar of that eventually runs through chips. This is the physical substrate thesis playing out in real-time dollars. The companies that own compute are buying equity in the companies that use compute.
Here's the variable nobody is modeling for May 19th earnings. With $40 billion in equity positions on the balance sheet, that is not just a chip demand report anymore. OpenAI's valuation wobbles, shows up in the numbers. Holds or climbs. That's a tailwind nobody has built into their models. NVIDIA holders are now exposed to startup valuations. That's a new kind of risk that didn't exist a year ago.
May 19th. Next Monday. Bet that now. That's the earnings call of this month. Quick one on Trump, Xi, because it stacks directly on top of everything else. Summit confirmed this week. Was delayed by the Iran situation, and it's back on now. Bloomberg flagged what they're calling the Trump call. At all-time highs, Trump historically takes harder stances because the market cushion absorbs the hit. He can absorb a 2% dip from 711. He could not absorb it from the middle of a correction. Courts killed his 10% tariffs last week. He's threatening the European Union. He's walking into Xi with legal losses and something to prove. 711 is the biggest cushion he's ever had going into a negotiation. That makes me nervous, not comfortable.
3 catalysts land this week. Iran ceasefire call. Consumer price index, Tuesday. Trump Xi. Any one of those swings the week. All 3 together. The VIX at 18 looks very cheap in hindsight.
All right, systems. Quick color? Then TB has something on uranium that you need to hear. TF, is sitting at $112,000 equity, 90% cash. System took profits May 7th before earnings week. Holding Allstate, ticker ALL, 42 shares, basically flat. 2 shares of Amazon, stub position. And 1 share of Cisco, ticker Citigroup. Citigroup O, entered at $91.98. Sitting right now at $96.57. I'm frustrated at 90% cash, but the system called this before earnings week started, and I trust the signal. Cisco reports, Wednesday, TFT has 1 stub through that print. System saying it likes the setup but won't size up.
Wave Trader update. This data is from Friday, May 8th. 3 days old. I want to be clear about that. Equity at $120,765. 8 open positions. 73.5% win rate. Positions working. Sunrun, ticker RUN, up 4.32%, 2 tiers hit. Form factor, that's FORM, up 3.6%, 2 tiers hit. Both doing exactly what the system is designed to do. New entry, May 8th, Qualcomm, ticker Q, Citigroup OM, up 1.86%. And the timing on this one is interesting.
Why interesting?
StockTup's weekly recap flagged Qualcomm calls as the single best trade of last week, up 5.96% on May 7th. Wave Trader entered the equity side 1 day later and landed on the same name. Different instrument, matching underlying signal.
The system found what the options market was already reading. That's not a coincidence.
Wolfspeed, current price up 2.35%, but cycle return is down 12.4%. The cycle return reflects the gap down reentry from last week. It's back in clean. Atlassian, TEAM, flat, small bleed. Canadian Solar, down 8.71%, worst position, new entry, no tiers hit yet.
Okay, the uranium thing. Because nobody else is calling this right now.
Centrus Energy, ticker LEU, down 0.72% this week. Energy Fuels, that's Energy Fuels, down 7.06%. Oil is at 97 and ripping in an active energy crisis. On the face of it, that makes no sense. An energy disruption should lift every fuel. But here's the theory. Netanyahu said on camera that enriched uranium must be taken out of Iran. That is bearish for a uranium customer. This war isn't creating a new buyer of uranium, it's destroying one. Oil rises when the pipeline gets cut. Uranium drops when a major customer disappears. One war, opposite outcomes.
Nobody on YouTube is calling this. I watched all weekend. Nobody. That is what separates people who think about the market from people who just react to the headline.
And the data check is today. Constellation Energy, ticker Citigroup, EG, reporting this morning, consensus estimate at $2.56 per share. They're the largest nuclear utility in the country. If they beat, domestic nuclear demand is real even while the uranium miners bleed on Iran. That would confirm it. The problem isn't nuclear power demand falling. The problem is one specific customer risk vanishing. Watch what they say about artificial intelligence data center power demand on the call. That's the line that matters.
That is the most underrated earnings call of today. Most people aren't even watching it. Earnings calendar this week. Today, Petrobras, ticker PBR, oil company in an oil-up environment, and Constellation Energy. Also, Simon Property Group, S. Procter & Gamble, and Monday.com, ticker MNDY. Wednesday, Cisco and Alibaba. Thursday, Applied Materials, ticker AMAAT and T. Semiconductor equipment. If the hardware rotation thesis has legs, Applied Materials tells you on Thursday. And next Monday, May 19th, on NVDA. Everything we talked about today runs back through that call.
Here's what we're watching for the rest of the week. Oil above $100 before the Consumer Price Index print. That is the inflation alarm. The Q's holding 700 on any dip. That's the line in the sand for this rally. Any Trump statement on the ceasefire plan before Tuesday is an immediate catalyst. Constellation Energy's call this morning tells you whether the uranium divergence theory holds. And Cisco Wednesday is your read on whether tech earnings keep running. You cannot predict the tweet. Nobody can. know your levels. Know where you buy, know where you sell, know where you walk away. Don't try to be clever about this one. Just know your plan before the plan changes.
May your alerts be faster than the president's thumbs. This is Trading Floor, Session 38. See you tomorrow, trading family.